So John Purcell is the Policy Advisor ESG with CPA Australia, with responsibility for the development of strategy, research, policy, and advocacy in the areas of sustainability, emerging net external reporting, corporate governance, and corporate law. So he holds multiple master's degrees in accounting and commercial law, and also a PhD from the Melbourne Law School at University of Melbourne. Prior to CPA Australia, John held executive positions in the international telecommunications sector with responsibility for cross-border tax planning and FDI structuring. So we've got a fantastic tax and law and accounting brain here, if anyone has any questions around that. So welcome, John.
Thanks, Sarah. Pleasure to be here, and welcome everyone.
Great. So first, maybe I should quickly clarify your title, Policy Advisor ESG. We haven't been using that term as much. Can you quickly touch on what that stands for and perhaps where it tends to be used?
Yeah, the terminology in this area of business activity has undergone somewhat of a transformation in the 20 or so years that I've been working in the space. The previous and at times but loosely interchangeable terminologies often are around sustainability, the notion in a corporate sense, viewing the embedding of a business within a broader economic context in which value is preserved essentially on an intergenerational basis. The other terminology often used in this area is, and it's probably not necessarily fallen out of favour, but is somewhat refined over time, and that's corporate social responsibility. A terminology now, a couple of decades old. It again, in an Australian sense, has very much issues associated with recognition of a moral and ethical dimension to business conduct. The actual precipitation of corporate social responsibility activities, and indeed the attention of regulators in Australia, centred around not so much matters of significant legal misconduct of company directors, but behaviour which was viewed as being morally and ethically highly challengeable. A lot of the leading developments actually go back to James Hardie Industries. Though I say that the term corporate social responsibility may have fallen out of a little bit of favour, it does reoccur in a more contemporary context. And when you start to look at some of the developments in relation to inclusive capitalism, it also addresses this idea of the corporation, or more broadly, business and capital activity as having a wider purpose to it over and above the generation of profit. And the profit indeed must have a social dimension to it in terms of its inclusiveness.
Great, thank you. That's a good, the terminology always kills me in this space because, let's be honest, there isn't one good word that really captures everything. I talk about sustainability and people think I'm talking about financial viability of their business. But CSR and ESG can be a little bit too many words to.
It is problematic. And then, the other dimension you get around sustainability is as you indicate, of business models and business viability. I think the important elements is to understand the degree to which environmental and social issues now directly impinge upon business, regardless of the size of the business.
So just to clarify for everyone, ESG does stand for environmental, social, and governance. So let's start with the big question for you as an accountant. Do you see sustainability and ESG as profit or loss to a business?
Again, this is something which has developed over time. Often accounting in a traditional sense would see itself a little bit remote from some of the developments around ESG and sustainability. Those who've had a long involvement in tracking the development of sustainability reporting would view it either in pejorative negative terms as being part of corporate reputation management, prone to greenwash. The reality is that the discipline which is now applied to sustainability reporting, be it derived from either European-based GRI or American-based sustainability accounting standard boards framework and guidelines, it is a highly disciplined form of corporate disclosure. Thus, accounting has overlap in terms of how it both interacts with and feeds off sustainability information as part of a wider set of corporate disclosures. The other transitions which you see taking place, often from a traditional accounting perspective, is that ESG, bear in mind, Sarah's reference back to governance, has a compliance element to it. So there is naturally a focus from an accounting standpoint as to how accounting can serve compliance in relation to environmental and social matters. Moving on, often a lot of the focus probably a decade ago was around looking at ESG, so the ENS subject matter, as being part of, particularly around when you look at the E limb of things, around particularly energy as being a source of cost reduction. E exposures are a cost which needs to be managed amongst a suite of costs, more particularly a sensitive, holistic view sees E, S and G both as part of how an organisation understands its risk and at the same time as being a source of competitive advantage. So to reiterate, across the decades, the subject matter has evolved, business understanding has evolved, and likewise accounting, I believe, has likewise responded. There may be criticisms as to the pace at which accounting has responded, but happy to flesh out some of those challenging matters as we progress through this session.
Yeah, fantastic. Because obviously risk management and competitive advantage, those can be very difficult to quantify, and they talk a lot about non-financial value, right? So how can you actually, I guess, quantify those in terms of a business sense, in terms of comparing them against financial outcomes and demonstrating that business sense?
Yeah, a couple of perspectives on that. If you want to go, firstly down sort of the governance limb of understanding. Although I come from a corporate regulatory perspective, a terminology which is used in governance speak is the social license to operate. And it is a real factor driving business behaviour. And you can see it, particularly in agribiz, that is a prominent driver of transforming business practice. Accountants as professionals are not only dealing with numbers, they are dealing with interactions, the various factors which impinge upon accounting numbers. There again, I would emphasise that accounting is not all about the numbers. One of the more interesting developments taking place in the sphere of accounting in the last decade has been what's termed integrated reporting and its underpinning in integrated thinking. Now, businesses are viewed as being more or less a bundle of capitals. Now, it's capitals, some of them are financial and quantifiable in financial number terms. Other capitals, which a business, regardless of its size, has either some level of command over in an ownership sense or some interaction with, are part of how a business model functions to generate value. Accounting looks now more holistically as to these type of interrelationships and how value is created over time through operation of business models. Accounting numbers obviously are still highly relevant from both a compliance and a decision-making sense, but we tend increasingly to understand business and accountants' involvement in business from these wider perspectives of interaction with other types of capital, be they relationship capital or in an environmental sense, natural capital.
Yeah, fabulous. And it's I think with accountants, perhaps we give you a little bit of a bad rap in thinking that you're only numbers focused, but every number has a story behind it, right? Like there's lots of business factors that are leading to those numbers going up and down. And so this is just another one of those business factors of, do you have that social license to operate? Are you being innovative? Do you have the internal social, intellectual capital, all of that kind of thing?
Yeah. Financial numbers remain highly relevant. The market responds to financial numbers and financial information, but we understand that financial numbers do have finite application. We understand the financial numbers drive certain information needs. So looking at externally, financial numbers serve particular types of stakeholder expectation about information content. But we understand also that that is not the full suite of information that a user of corporate information would wish to have access to and make decisions based on that. Now, flip that to internal operations inside a business. We understand that, particular aspects of business may not be quantifiable, or they may be quantifiable but not monetized, but they do have an implication in understanding total performance of an organisation and how the organisation manages risk. And, you know, we may get into some of the discussions around how organisations now look more contemporaneously at capital allocation decisions, and a realisation that such decisions are drawn from a range of factors, financial and non-financial.
Yeah, absolutely. Okay. And so as you're saying around that capital allocation, I think one thing that really can be hard for a business to wrap its head around is a lot of sustainability takes a long-term investment. You know, it's a big upfront investment that will have a return on investment, but sometimes it might be a 3-year payback. And a lot of businesses, that's too long to wait. So how can businesses account for that within their budgeting and their books?
Yeah, interesting and challenging questions. Again, how businesses view themselves, how they understand their impacts, and how they understand their long-term viability is shifting. Now, in a narrow financial mathematics sense, decisions around where a business allocate its funds may perhaps either traditionally or through a very narrow prism is looked at in terms of financial mathematics, the time value of money, net present values. That is not, it is relevant, highly relevant, but is not the full picture of how businesses make decisions. You can almost flip things on their head and say that, well, businesses don't in fact start with these hard, firm financial criteria in terms of how they allocate internal capital, or the projects that they invest in or disinvest in. The threshold really is to start to look at what the business strategy is. And does an investment proposal, does a capital investment, does an acquisition satisfy the long-term strategic needs of the business? And really it is only then that we start to then graduate into both the hard analysis of the financial aspects of a particular proposal. Now, again, businesses are not beholden necessarily to these preconceived ideas about internal hurdle rates of return. Sophisticated businesses both obviously apply that type of rigour to their capital investment appraisals, but in parallel to that, they have other criteria around ESG performance. So quite often in industries or businesses where environmental matters are highly sensitive, an ESG factor is built into the decision-making process, and a more holistic approach is then taken around business decision-making. And again, I think there is shift away from a pure financial expectation about long-term viability, and an understanding that a business's viability is a combination of both financial factors, strategic factors, and, taking back to some of our original discussion, a capacity to maintain its social license.
Okay. Sorry, just remembering that for later. So are there actually any accounting sort of techniques, I guess, for those businesses that they can apply to perhaps even hold that money aside in their budgeting?
Yeah, often, yeah, again, inside businesses, the practice often now is to develop a matrix of different type of criteria, so that you look at internal capital allocations in a more strategic portfolio sense, that there are investments which necessarily achieve corporate operational goals and may be subject to pure financial DCF type calculations to justify to be the basis of a go or no-go decision. Alternatively, there will be particular forms of decision making which satisfy ESG type goals. Now, some of those may be imposed, they may be regulatory based. So, it is quite a subtle series of decision making being undertaken inside these organisations. Now, some of those decisions, more of a regulatory sense, where there is potential environmental or social type exposures, those factors are likely to be weighted more highly in the decision-making process. But then you move further down to E and S activities, which may be viewed as more discretionary in nature. And then that ties back to the corporate strategy and seeing whether, accepting a lower rate of return on that type of investment nevertheless sustains the business on a long-term basis. So we are going back to older type terminology around sustainability. Things do tend to go full circle in a way. But I would highlight one other insight, and that's around the interaction between ESG issues and what's termed the cost of capital. ESG, as I perhaps indicated at the outset, is often regarded, has some time back typically been regarded as either burden or discretion or some form of impost. Companies raise capital or small businesses obtain funds from various sources. Those sources make an assessment of risk. Increasingly, ESG performance and ESG disclosures are recognised as a form of lowering cost of capital. So to be able to demonstrate strengths in E, S and G can be rewarded in the market by a capacity to raise funds at a lower cost than might be otherwise the case, through the capacity to demonstrate that the business has been able to identify its emerging E and S type risks and have the governance processes in place to manage those. So this is part of a shift in mindset amongst businesses and a shift in the way capital markets respond to ESG factors. They are essential, not discretionary anymore.
Yeah, absolutely. Yeah, I think that more and more businesses are obviously realizing that they're behind and catching up to that. We were also having an interesting conversation yesterday around the Sustainable Development Goals and how they can actually help a business with resilience. Resilience was obviously quite the buzzword last year with a lot of small businesses. So how would you say that sustainability can help a business build resilience for future shocks?
It is very much about understanding your business model. Also, and if you were to go back to the discussions about the Sustainable Development Goals, and it's interesting to observe how they drive business behaviour, and where the SDG goals sit in relation to other drivers of corporate management and disclosure of their E&S performance and risks. The SDGs, now, okay, you would accept that these are to a degree aspirational around where the world wishes to see itself in terms of achieving transformation and inclusive processes by 2030. They are very useful for businesses to understand and articulate where they see themselves sitting within these broader development trends. And 2020 has been a very salutary experience for all of us. And one of the other important, I think, annual pieces of information that people who work in this space make reference to is the World Economic Forum annual risk assessments. And quite interestingly, if you look at those, they show a high degree of sensitivity as to what has happened in the past year, particularly around inclusiveness and the threat to inclusiveness posed by the pandemic. Now, where does this fit into how a business operates? It allows a business to assess its vulnerability, because a failure to continue along the path of particular inclusive aspects within the SDGs undermines economic activity. It makes economies less inclusive and potentially more unstable. So the SDGs do form a good analytic point for businesses to understand the wider implications, what their social license is, in fact. We've moved past, I think, any enduring view that the purpose of business is business, the purpose is purely profit. Businesses, be they large or small, are focused on not only their resilience, their capacity to withstand shocks like the pandemic, but also within that resilience to have duration over time.
Yeah, it's all about that long-term focus, isn't it? For accountants, what role do accountants play in all of this, in managing a business's sustainability and ESG, for example? And where do you think that they could be playing a bigger role?
Yeah, again, the profession is under a degree of transformation. Peter Backer, the chair of the World Business Council for Sustainable Development, remarked a number of years ago that accountants will save the world. Others would take a more sceptical view and say the particular aspects of accounting may in fact be impediment to necessary transformation. In fact, that accounting fails to capture the true value of a business in terms of its reporting. I'll tend more to Mr. Backer's view, but recognise that there are challenges along the way. Again, I think we need to recognise traditional areas of accounting contribution, say in relation to measurement and in relation, say, for example, to assurance of information. That in and of itself is indicative of the changes which are taking place and where the future direction of accounting will go. If I haven't made it clear already, measurement is not only in terms of financial numbers. Measurement is in terms of understanding non-financial factors, how they can or cannot be quantified, and if and not it is appropriate for them to be monetised. Increasing that takes accounting outside of its traditional area of operation of handling accounting type numbers. Similarly, assurance. Assurance is no longer audit over financial numbers. Assurance is increasingly over non-financial matters, be it in relation, say, for example, emissions data, assurance in relation to operations within supply chains, say, for example, around modern slavery or exposure to foreign bribery, issues around the sourcing of particular types of minerals to be built into operations. These are all multidisciplinary type activities to which accounting has a contribution, has a role, but not the exclusive role. Accounting, though it will continue in its traditional areas around external reporting, particularly those to do with numbers, internal budgeting, capital allocations I've discussed. But at a strategic level, accounting necessarily, as with all professions inside organisations, need to start working across organisational boundaries. Hence, I go back to this idea which underpins integrated reporting, that the way businesses operate into the future is more in terms of its processes of integrated thinking, understanding the components of a business, how they operate in an interconnected fashion, but equally how the business interacts with its external environment.
Great. Yeah, you touched a little bit there on conflict minerals, which I think we're kind of embedded into a accounting type legislation in the US. I believe it was the Frank Dodd Act, and it was like one particular section. Someone just kind of snuck in this little piece of, oh, by the way, any metals that you use, you have to track back to where they're originating from, and if they're coming from the Democratic Republic of Congo, you must find out what mines they're coming from, all of this. And accountants are going like, say what? What does this have to do with me? So that it's interesting that some people view that as that could just as well be an accounting issue. And accountants are going, no. So I wonder, like, how do we talk to, especially in a small business who might have a more traditional accountant in the business or traditional, head of finance within the business. How can we talk to them to help them understand, to be able to start being more integrated and to broaden their thinking about value?
Yeah, an interesting and challenging issue. On the one hand, you can say that in an SME, and an accountant has a defined role, a defined set of tasks. You can look at that though from different perspective. Accounting actually is the point at which many parts of a business actually, it's not the centre of the business. I will never argue with it that account is the centre of the business, but a lot of corporate information centres around how accounting captures data and how accounting assimilates, understands data. So the discipline associated with what we call in accounting a skeptical view is one of probing information to understand its veracity. So a business's non-financial exposures can be understood from a accounting type discipline around the accuracy or otherwise of that data and whether that data can be prone to manipulation. The skeptical view about information. It may seem trite to say this, but it does both require a shift in mindset amongst accountants to understand that they have an imperative to work outside their comfort areas, but also, I think, is incumbent on business owners and manage to understand the strengths that accountants can bring to these very critical areas.
Absolutely. Those that you've touched on, certainly around measurement and assurance and being able to look at the non-financial factors as well. So if anyone has any questions, please make sure to put them in the chat. But I will ask John my one question that I'm asking everyone, which is what is your number one piece of advice for a small business looking to better integrate sustainability into its value proposition in 2021?
I think it is very much about an appreciation of the external environment and understanding that E&S are both the source of opportunity and a challenge to business viability. A sensitivity to one's environment. And again, this may sound a little bit trite, but it compels looking beyond the short-term time horizon. Now, SMEs potentially more, perhaps even down the micro business level, and I don't appreciate the problems of generality, but business survival is often driven by a narrow perspective of financial viability. Am I solvent? Am I still a going concern? Will my lenders continue to extend me funding? Will my creditors still extend me credit? An appreciation of the external environment allows one to anticipate both threat and opportunity. And I think looking at an SME perspective, these are important factors around how an SME understands its succession. What are going to be the steps that the SME takes to make sure that that business continues in safe hands? Understanding environment from an E and S perspective allows you to understand better what your competitors are doing and where your competitive threats and opportunities are going to come from. And increasingly, these are going to be driven by E and S factors. Now, often the regulatory reach around E and S is applied at the big end of town. That cascades down to SMEs. They are impacted by the supply chain implications of what happens upstream and downstream. The SME is not remote from these factors and must have the capacity to understand what's happening in its environment. And again, the agility of an SME is a plus in this, though it can be a negative. The agility requires the SME owner and its management to move away, take time out from the short-term imperatives of survival and look at the bigger picture of the environment and what that offers in terms of both opportunity and threat. And recognising that the categories of what is E&S are not static. They evolve over time, and they are factors which emerge in the Australian economy, and it allows you to understand more deeply where your SME sits within the shifts which are taking place quite profoundly in the Australian economy.
Absolutely. That was a really good summary. Now, Adrian has given us a very long question here. Let me see if I can get through it. There is more opportunity with this in small business than larger, as they can be quicker to move, as you were just touching on, John. Larger businesses will require concrete regulations, costs, and rules to be able to apply it to complicated businesses. But the more abstract internalizing costs and issues that are otherwise borne by society and not your own business can more easily be done in a small business where parties are more aligned to the end goal and the impact focus. So what can accountants bring to the table to actually represent the data and account for it? I'm not sure if I'm capturing if that question is clear enough. Do you think that that's clear, John, or do we want some clarification from?
Yeah, Adrian? Look, I will attempt to hopefully take an answer down the path which answers that to a degree of adequateness. Regulation is a cost. It is an impost, and it necessarily is borne by businesses at various levels within the structure of the economy. Problems arise. Say, for example, environmental regulation. The cost of that is, whilst it is a cost in a rational sense, which ought to be borne across the whole economy, is actually the burden of which is borne by particular areas which are potentially the inadvertent victims of regulation. So environmental regulation can have knock-on effects for parties who are not directly subject to those regulations. They are dependent on sectors of the economy which are potentially increasingly subject to regulation. The regulation may have cost consequences in terms of how those costs are passed on out into SMEs who are consumers of entities which are prone to environmental regulation. The threat then is to understand how your business model can build a level of resilience to withstand that type of impost being passed on to you. Potentially, it may allow you to not only adjust your cost structures in anticipation of that increased impost, it may also, taking a broader viability perspective, allow you to understand what your opportunities are in terms of diversification, how you can diversify your operations to spread the impost of the risks associated with regulation applied upstream from where the SME operates. I hope that answers to a degree a very lengthy question.
Yeah, it's quite a big can of worms to be opening right at the very end of a session. So I think we'll have to finish there. And now John has already sent me one link that I will share in the Facebook group for especially, I assume it's particularly relevant to anyone in a financial or accounting position to access the ESG resources that CPA provides. Is that true? Yes. Cool. So I'll pop that in the Facebook group. I also will include a link to the World Economic Forum risk assessment that has been released in the last month, I guess, that John mentioned as well, because it is quite interesting to look at, maybe 5 years ago, the World Economic Forum, all of the risks were financial ones, and the last couple of years, they're all green and red in the color scheme, i.e. environmental and social risks these days that are absolutely impacting on businesses and economies around the world. So thank you so much, John, for your time. It has been, I think, interesting for some of these people who are more sustainability type backgrounds to hear from you around the accounting side of things and how to talk the business language. So it's been fabulously useful. Thank you very much.
Thank you. Because, so one final remark. Often the sustainability discussion and the accounting discussion happened in different rooms. We are now quite often, thankfully, in the same room. So thank you for this opportunity.
It is about time. Thank you so much, John.
My pleasure.
Yes. Bye.
Thank you.